Okay, so in the last week's tutorial, we haven't discussed this extension question. I think this question is quite interesting. So I want to start today's tutorial by discussing this question. Okay, so back to the performance management system topic. Okay, so now we have Yilmaz runs a popular food shop in the local shopping center and sells a variety of food products, including kebabs, gozlimi, and baklava. During the month of September, Yilmaz sold 500 kebabs, 750 gozlimi, and 250 of baklava. Okay, so we have the price of each product, the quantity of each product, so 500, 750, and 250. Yilmaz paid rent of 1,000 per month and employed a salesperson for 500 per month. So these two costs is basically the common fixed costs. Okay, so we have common fixed costs of 1,000 plus 500. Okay, so because this cost is not easily traced to the products or segment, so we should treat these two costs as the common fixed costs. So 1,500. Okay, and we also know the selling price per unit. So kebabs $10, gozlimi $8, baklava $3. Variable cost per unit, so $4, and $2. And traceable fixed expense 1,000 for kebabs, 1,000 for gozlimi, and 750 for baklava. Okay, and then Yilmaz is planning to undertake a marketing campaign next week to try and improve sales during the lunchtime rush. The advertising campaign is expected to cost 500. So the additional advertising expense is 500, and only one product can be featured. So the company should choose one product to be promoted. Yilmaz believes that the marketing campaign will lead to 1,000 increase in sales. So the sales will be increased by 1,000, regardless of which product he advertised. And he's planning to promote sales of gozlimi. So this company choose gozlimi to be promoted. Okay, and then we are required to prepare a segmented income statement. And then, do you agree or disagree with Yilmaz's decision to promote gozlimi? Okay, why or why not? Which product do you think should be featured in the marketing campaign? What other advice do you have to Yilmaz regarding his business? Okay, so first let's prepare the segmented income segmented report. So we have three products. So we have kebabs. So kebab, and then gozlimi and baklava. Okay, and total. Okay, and we start with the revenue. So first we calculate the sales of each product. So the sales is the price multiplied by quantity. Okay, so we know the price of kebabs is $10 per unit and quantity is 500. So the sales will be 5,000 for kebabs, and for gozlimi is 6,000, and for baklava is 750. Okay, so in total we got 11 and 750. Okay, and then the variable cost. Variable cost is the variable cost per unit multiplied by the quantity. Okay, so we know that variable cost per unit for kebabs is 4, and the quantity is 500. Okay, so this will be 4 times 500 is 2000, and then 3000 for Gozlimi, and baklava is 500. Okay, in total we get 5,000 and 500. So sales minus variable cost, we will get the contribution margin. Okay, contribution margin is basically the price minus variable cost times the quantity. Okay, so this is 3,000, also 3,000 and 250. In total, we get 6,000 and 250. Okay, so this is the contribution margin of each product. And then we deduct the traceable fixed costs. Okay, traceable fixed cost for kebab is 1,000. Okay, so 1,000 for kebab, 1,000 for Gozlimi, and 750 for baklava. In total, we get 2,000 and 750. Okay, so contribution margin minus traceable fixed cost, we will get the segment margin. So this is 2,000 for kebab, 2,000 for Gozlimi, minus 500 for baklava, and in total we get 3,500. And lastly, we need to deduct the common fixed cost, which is 1,500, and we got the net profit. Okay, which is 2,000. Okay, so this is the segment report of each product and also the total. Oh, lastly, we have to calculate the contribution margin ratio. Okay, so this is basically the contribution margin divided by the sales. Contribution margin of kebab is 3,000. The sale is 5,000. So 3,000 divided by 5,000, we get 60%. Gozlimi 3,000 divided by 6,000, we get 50%. Baklava 250 divided by 750, we got 33.33%. Okay, so yeah, this is the segment report. And now the company decide to promote Gozlimi. Okay, and get 1,000 of additional sales. Just to remind you how we interpret this contribution margin. So if we have a contribution margin of 50%, it means out of $1 increase in sales, 0.5 will be the additional contribution margin, and the other 0.5 will be the additional variable cost. Okay, so this is how we interpret this contribution margin. And now the sales is increased by 1,000 because of the additional promotion. So we can know that 50% of the sales will go to the contribution margin, which is 500 contribution margin, and the other 500 will go to the variable cost. Okay, and don't forget, we also have additional advertising costs. So advertising expenses, which is additional traceable fixed cost. Okay, so it's a traceable fixed cost is 500. Okay, so 500 minus 500, we will get 0. Right? So if the company choose to promote Gozlimi, they will end up with 0 additional segment margin. Okay, and also 0 additional net profit. Okay, so you can see from this calculation that promoting Gozlimi is not a good idea. Okay, because the company will end up with nothing. Okay, no additional profit and also no additional segment margin. Okay, so which product do you think should be promoted instead of Gozlimi? Any idea? So which product? So the idea is that the company should promote the most profitable product, right? So the company should promote the product that gives them the highest contribution margin. Okay, so in this case is kebab. Okay, so compared to the other two products, kebab has 60% of contribution margin, which is in the very short term profitability, kebab will give the company the highest profit compared to the other two. Okay, so if the company decide to promote kebab, and the sales of kebab will increase by 1,000. Okay, so increase by 1,000, and we can know that out of this 1,000, 60% or 600 will go to the contribution margin, and the remaining 400 will go to variable costs. Okay, so the company will have additional contribution margin of 600. And then we deduct this with the additional advertising expense. So advertising costs is 500. So it's basically the traceable fixed cost for 500. Okay, and the company will get additional segment margin and profit of 100. Okay, which is much better than promoting Gozlimi, right? So now the company have additional profit and segment margin if they decide to promote kebab instead of Gozlimi. Okay, so you have to remember the principle that the company should promote, or maybe if they're thinking to increase the capacity or increase the production, they should prioritize the most profitable product. Okay, which is reflected in the highest contribution margin ratio. Okay, next is what other advice we can give to this company. So if we look at these three products, I think we should give more attention to baklava. Why? Because this product is making a loss. Okay, compared to the other product which gives some company, which gives some the profit to the company. Okay, so if we look at the baklava, so the sales and the variable costs of baklava looks okay, and the contribution margin are still positive. But when we deduct the contribution margin, when we deduct the traceable fixed cost from the contribution margin, we get a negative segment margin. Okay, it means that the problem is in this segment margin, sorry, in the traceable fixed cost. Okay, so the company need to identify or analyze what are the elements of this traceable fixed cost. Okay, what are the elements of this traceable fixed cost, and try to minimize the cost. Okay, they should find ways to minimize this traceable fixed cost. So they need to lower this cost and make this baklava profitable. Okay, so they should find ways to lower this cost. And if they cannot lower the cost, they may consider to stop selling baklava. Okay, they may consider to discontinue this product and just focus on kebab and goslimi. Okay, so if the company decide to stop or discontinue the baklava, they will get 4,000 of segment margin instead of 3,500. Okay, and then maybe by focusing their resources to these two products, they may get higher profit in the future. Okay, so yeah, this is the other advice that we can give to this company. Okay, so this is the typical case that you will find in your final exam. Okay, so in the exam, you will be given with this kind of case study. Okay, and you should apply your knowledge of the segment report and contribution margin and segment margin into this kind of business decision and evaluate whether the decision is preferable, or you can suggest any other decisions using these using the calculation and also insight from these calculations. Okay, any comment or questions?
No, all good.
No. Okay, so we can stop this and move to our topic for today's tutorial. Okay, so our topic is accounting for sustainability. Okay, so this is basically a new topic and very interesting because now the accounting profession want to integrate other two perspective or other two horizon of a company's performance. So in the past, the accounting profession tend to focus on financial and economic performance, and now they have to integrate the social and environmental performance of company. Okay, it means that accountant also have to record any impacts on environmental and social because of the company's operation. Okay, and report this impact in the financial report. Okay, or what now we call as an integrated report. Okay, a little bit history about this concept. So in the late 1930s, we have an economic recession at the US. Okay, so we have a Great Depression. So because of the lack of consistency of financial statement, so the investors lost trust on the financial reports, and this made the US capital market collapse, and the problems is spread into some other capital markets, okay, and make huge depression in the several countries. Okay, so this depression trigger a single and common accounting standard, okay, to improve the comparability of the company's financial statement. Okay, so this standard now we know as an International Financial Reporting Standard, or IFRS. So Australia and any other countries also follow this standard. So now the financial statement of a company is comparable to other company in other world because they're using the common financial report standard. Okay, so and there's another concept called sustainable development. So in 1983, the UN developed another concept of development which tried to balance the objective of the development, not only focusing on the economics, okay, on GDP or the economic growth, but try to balance between economic, environmental, and social objectives. So this concept is basically affect the accounting professions. So now accounting profession need to also take into account the social and environmental impacts of the company's performance. Okay, so what we call as a sustainable performance. Okay, and we also have another concept called CSR. So corporate social responsibility is basically the way of how business try to adopt the sustainable development concepts. Okay, so now business, instead of making profit, they also need to consider the social and environmental impacts of their activities. Okay, so the standard that we use to prepare this new integrated report is the standard developed by the GRI, the Global Reporting Initiative. So the GRI basically create or try to compile the existing standard, okay, which gives some guidance on social and environmental reporting, and they compile the standards into one single standard. Okay, and which very comprehensive. And if the company comply with this standard, they already comply with other standard, which regulate the same thing. Okay, so the GRI standard is the most widely accepted standard for sustainability reporting or integrated reporting. Okay, and then there's also another standard developed by the Sustainable Accounting Standard Board, which try to integrate the social and environmental consideration into the financial accounting standard. Okay, one important question about this issue is, does sustainability pay? Okay, so if the company become more sustainable, they become more responsible, they invest more on the environmental and social programs, whether this is preferable from the investor perspective. Okay, so whether in the long run, if the company invests more on this kind of activities, whether this will improve the company's financial performance. So many research document that actually is good. So if the company invests more on the sustainability and responsibility activities or programs, their financial performance will be improved. Okay, so their share price will be increased, the investor and the customer become more loyal, and they can access more financing resources. Okay, so their cost of capital will be lower. Okay, so basically these kind of activities improve the whole company's operations. Okay, from the cost side, revenue side, and also the financing side. Okay, and one framework that tried to map how actually these sustainability and responsibility activities morph into the company's financial performance. Okay, so this framework calls the value creation levers. So basically we have 6 value creation levers, and each lever try to capture the impact of any sustainability or responsibility programs or activities done by the company. Okay, so first we have the pricing power. So sustainable company will have stronger brand, and if they have a stronger brand, the customer become more loyal. They can charge higher price to the customers, okay, and provide them with a greater pricing power. Okay, so if we look at the brand like Unilever, so Unilever is consistently use the social and environmental responsibility as part of their campaign and their brand identity. Okay, so now the customer become more loyal to Unilever's product, and Unilever can charge higher price. Okay, and then cost saving. So if the company want to become responsible or sustainable, first they have to invest in the certain business process, or they have to invest in certain activities that initially will incur more costs, but in the long run, this investment will give them a greater efficiency in their cost structure. Okay, so they become more efficient of using their resources. They can also manage their supply chain more effectively, and also lower the cost and tax. Okay, and then the employee recruitment and engagement. So if the company become more responsible, the the employees are happier and become more productive. So the company can attract and retain high qualified employees, okay, and will affect their productivity. Okay. So these three value creation levers will affect the company's operational margin and also the profits and the shareholders return. Okay, and next we have the market share. So there's a new group of customers which only want to consume green products, so products produced by a sustainable or green company. So this kind of customers is quite sizable. So the size is growing rapidly, particularly in the developed countries. Okay, so now we have like certification process, for example, for paper products or palm oil products. Okay, so we have certification process like RSPO, the Roundtable Sustainable Palm Oil, which certify that this palm oil is come from a sustainable resources, okay, sustainable farming as well. So this kind of customers is basically very captive. So if the company can penetrate this group of customers and try to extract economic benefit from this group of customers, they could expand their market share. Okay, and new market entry, similar idea. So the company can penetrate a new customers group, okay, particularly customers with high preference on sustainable and responsible products. And lastly, we have risk premiums. So if the company tried to manage their environmental and social risk properly, so they will have a lower market balance sheet and operational risk, and they can access more financing source. Okay, so there's a group of investors that only want to invest on sustainable companies. Okay, we call this group as a sustainable, socially responsible investors. And there's some bank as well that only want to give financing to sustainable projects. Okay, so we also have the green banking principles. Okay, so because this kind of company can access more financing resources, now they can lower the cost of capital. Okay, and affect their premiums and affect their valuation and also the shareholders return. Okay, so if you given any case or any sustainability project or activities, you have to relate the activities or the program with these value creation levers and try to identify how these programs will affect the company's financial performance. Okay, for example, if the company introduce a new recycling program, so we call this as a 3R, reduce, reuse, and recycling products. So you have to identify how this product will affect these 6 value creation levers. So first, if the company implement 3Rs programs, so the cost saving or cost structures will be improved. Okay, so now they become more efficient in using their resources, right? So and then it may affect their purchasing power, the purchasing policy, and also can reduce some costs in the purchasing of direct materials or supplies. Okay, so cost savings will be affected. And the other one is the risk premium. So if the company manage their environmental and social impact through the reduce, recycle, and reuse programs, in the long run, their environmental and social risk will be lower. Okay, so these two will affect the company's profit and also the shareholders' return. So in any case of sustainability or responsibility activities, you can always connect them with these value creation levers, okay, and explain how this value creation will map into the company's financial performance. Okay, any comment or questions at this point? No? Okay, so and the next concept that you should memorize from this topic is the type of the environmental cost. Okay, so we have two types of environmental costs. The first one is the external cost. So this is basically the cost of the external parties because of the company's operations. Okay, we also call this externalities in the economic term. Okay, so for example, if because of the companies is running mining site in the communities areas, so the community around the mining site will be impacted, and they may have some social costs because of this mining activities. Okay, so this kind of cost is really difficult to measure by the company, and typically it's not reported in the company's balance sheet or profit and loss. Okay, so the main characteristic of the external costs is these costs are not reported in the financial statement. Okay, and the next one we have the internal costs. Okay, so in the internal costs, so internal cost is basically the opposite of the external cost. So for internal cost, the company can reliably measure the amount of the cost, and they should report this cost in their financial statement. Okay, so we have four types of internal costs for environmental related activities. Okay, so first we have the prevention costs. So this is basically the cost related to any kind of prevention activities. Okay, so the cost of purchasing a new environmental equipment, the cost of hiring a new environmental experts. Okay, that's kind of cost should be categorized as prevention costs. We also have appraisal costs. Okay, so the cost of monitoring and evaluating any potential environmental problems. So the cost of purchasing a new monitoring equipment, the cost of hiring external consultant or hiring environmental expert is to be part of the appraisal cost. Okay, and then internal failure costs. So if there's an incident of environmental failure, the company have to deal with this failure, and they have to incur some costs, right? For example, in your textbook, there's a case on an European automotive companies. The company produce a car with some failure in the emission system. Okay, so the company have to recall the car from the customers and fix these failures and give the car back to the customers. Okay, which give them some substantial costs. Okay, so this kind of failure costs will have to deal internally, and the company have to report these costs in the financial statement. The next is the external failure. External failure is basically the cost that the company have to pay to external parties because of some environmental failures within their business operations. Okay, so for example, because of some environmental failures, the company have to pay fines to the government and also have to pay compensation to the communities, okay, or some subsidy. Okay, this kind of cost is external failure cost. Okay, so yeah, this is the four type of environmental costs that we need to know from this topic. Okay, and lastly, we have, I think we have discussed this. So accounting for sustainability basically consists of three elements. So we have economic or profit, social or people, and environmental or planet. So we integrate these three concepts in one single reporting, what we call as an integrated report. Okay, so by reading this report, the investor and shareholders have a better perspective of the company's operations. Okay, and they can measure whether their investment in this company will be sustainable and profitable and also sustainable. Okay, so now let's move to your homework. The first one is the exercise 4. So in this exercise, we have the Sydney Opera House host high-profile events and corporate function as part of its revenue-earning activities. How might the inclusion of recycling? So this company introduce new recycling programs. How might the inclusion of recycling cause Opera House management to restructure their operation, provide 3 sustainability performance indicators around recycling and reuse that might relate to operation in the Sydney Opera House? Okay, so first, how this program affect the operations? Okay, so as we have discussed, in the initial stage of the program, the company need to invest on some equipment or some function related to this programs. So they may need to establish a new department or new unit, or adding more jobs to the existing unit, which relate to this in relation to this new projects, recycling and reduce. Okay, so it may affect the company's operation, and the company need to change their structure and their business process a little bit, okay, in order to adopt this program. Okay, so in the operational wise, this program may affect the business process of the company. Okay, so the company may need to add some business process to the existing, and this program may also affect the structure, okay, the organizational structures of the company. So they may need to establish a new unit or new departments in relation to this program. Okay, so yes, it will affect the company's business operation. Okay, so in terms of the financial impact, so as we have discussed, the 3R program, so reduce, reuse, recycle, will affect 2 value creation levels, which is the cost savings, and also the risk premium. Okay, so the programs initially will incur more cost, but when the programs start running quite frequently, the program will lower the company's business costs or operational costs. Okay, and the program also will lower the company's risk premium. Okay, now the company have less risk or less risky business process. Okay, and these two will map into the company's financial performance and affect the shareholders' return. Okay, and then we have to suggest the key performance indicators to evaluate this program. So I think first we can suggest the recycled waste to total waste. So the ratio of the recycled waste divided by the total waste. Okay, so this ratio will capture the portion of the waste that being recycled in this program. Okay, so we should expect that this ratio will be growing year by year. Okay, which reflect the progress of this program. And then investment in recycling programs and awareness. So we can also use the amount of funding or budget to finance this recycling program, and also some awareness program to the customers and also the employees. Okay, and then recyclable inputs to total purchase of disposable goods. If this program also affect the company's purchasing policy, we can also use the ratio of recyclable inputs to total purchase. Now the company is preferred to purchase more recyclable input compared to the ordinary input. Okay, so we can use a percentage of recyclable input to total purchase. Okay, and then energy intensity and energy consumption because of these new activities. And lastly, we can also use the staff training costs in relation to recycling policy. Okay, so staff training costs in relation to the recycling policy. So staff training costs should be reported in terms of the investment in the human resource, okay, in particular related to this program. Okay, any comment or questions on this exercise?
Like in exams, we will get some questions like this.
Yeah, you get some. Well, case like so this company start a new program or sustainability programs like this kind of program, or maybe they have other programs like consumer protections, okay, or they have some more green manufacturing process, okay, and you have to comment on those programs and how this program will affect the companies financially. Okay, so basically you can use the value creation levers to explain the impact of this program to the company's financial performance.
Like you mean using which one to identify the effect? Like
yeah. So you can choose from this 6 value creation levers. Okay, so you can choose 1 or 2 or maybe 3 out of the value creation levers, so which explain the effect of this the programs to the company's financial performance. Okay. So it depends on the project or activities, so whether it's related to customers or production or the cost. Okay, but you can always explain how the activities will affect the company's financial performance.
Okay, so we use these levels to explain how it will affect the companies, and then do the KPI to identify the indicators, performance indicators.
Yes.
Okay. Yeah, I got it.
So the KPIs basically need to monitor and evaluate the progress of the programs. Okay, whether the program is progressing, or it should be progressing, right? So the management need to have some performance indicators, right, to evaluate whether the program is progressing or they need to make some improvement.
Yep. All right. Okay. Yep, I got it.
But the levers is mostly on explaining the financial effect of the program.
Yep, I got it.
Okay.
Yep.
Okay, the next one is chapter 15, exercise 6. So in this exercise, we have to classify which costs are categorized as an external cost and which cost is categorized as an internal cost. Okay, so as we have discussed, the main difference between external and internal cost is that external cost is really difficult to be measured and also costly. So the company typically did not report these costs in their financial statement, while internal cost is easily or reliably measurable, and the company should report these costs in their financial statement. Okay, so the first one is the direct materials for the production of a can of Sprite. So the direct material cost is obviously measurable, right? The company should report their direct material costs in the manufacturing costs, okay, other than the factory overhead and direct labor costs. So this expense should be included as an internal cost. Okay, and then employee illness owing to additional work hours covered by employer. So the illness cost is quite broad. So some of the illness cost is measurable. For example, the medical treatment cost is obviously measurable by the company because the company should cover this cost. So that should be internal cost. But some of the social cost of being ill is not measurable, right? So for example, because the company is because the employee is ill, he or she cannot spend some time with her family or his families, okay, and he or she cannot do some social activities. So this kind of cost is really difficult to be measured. Okay, so some of the costs will be internal costs, okay, which is reliably measurable by the company, and some of the costs will be external costs. Okay, and then next is the increasing crime rates owing to juvenile youth crime arising from the absence of parental supervision. It is strongly attributed to the introduction of production plan 10 years ago in the immediate area. So the cause of increasing crime rates is also really difficult to be measured, right? So even though the question said that this is strongly related to the company's operation, but the companies cannot measure this cost easily. Okay, so we should categorize this cost as an external cost. Okay, and then landslides impacting village communities arising from mining activities on the other side of a mountain range. So the cost of the environmental cost because of the landslides. So if the company want to measure this cost, the company may need to hire some environmental expert, okay, environmental expert to comment or to evaluate this cost, okay, which is quite costly to the company. So typically the company will not report this environmental cost in the financial statement. Okay, and typically we will should categorize this cost as an external cost. Okay, and then rent for factory premises. So rent expense is obviously measurable. Okay, so we should categorize this cost as an internal cost. Okay, and then workers' compensation arising from employee injuries. So because of some accident in the working area, so the workers or the employees need to get some medical treatment. Okay, and the company gives some compensation. I think the portion that the company can reliably measured should be reported as an internal cost, and the portion that cannot be reliably measured should be categorized as an external cost. Okay, so this one is internal cost and external cost. Okay, so yeah.
Ông ngồi bảo mẹ gửi 50 triệu cho vợ mà.
Thôi, bị cất vào tủ đi chứ.
I think I need to mute. Okay, yeah, so hopefully you get the idea that the main difference between internal and external costs, right? So basically the internal cost is reliably measured, can be reliably measured by the company and should be reported in the financial statement. But external cost is basically the externalities. So it's really difficult to be measured and costly. So the company typically did not report this cost in the financial statement. Okay, some additional suggestions to minimize the external cost. So the idea is the company should minimize their external costs or externalities. Okay, and first, for the increasing crime rates owing to juvenile youth crime, the company may initiate community development programs, so to give more productive activity to these young generations. And then they have to manage the working loads. Okay, so maybe lower the hours of the working hours and also the overtime of these employees, so they can spend more time with their families. Okay, so yeah, so managing working loads is very important. And for landslides impacting village communities, the company may invest in the community infrastructure programs. Okay, and invent some monitoring system of the land structures. Okay, so they may invest in this kind of environmental monitoring activities to help alleviate their external costs. Okay, and then for worker compensation because of the injuries, the company should implement the occupational health and safety standard, okay, at the highest level, and also hire some external consultant or external auditors, okay, to do the safety audit, okay, and asking for some suggestion for improvements. Okay, so the idea is the company should minimize or lower their external costs. Any comment or question on exercise 6?
Like, I'm thinking about, like, for this type of questions, are there any like suggested answers, or it definitely depends on what we think can solve the problem?
Yeah, so you have to,
like,
I think, yeah.
Like, for example, for the ethics topics, there are
Yeah.
problems and suggested solutions for that problem as well. So it's just what we need to do is just determine the problem and use the correct solution that have been suggested.
Yeah.
So my question is that, is there any type of suggestions for this topic, for sustainability topic, or it's just our opinions on it?
Yeah, I think the approach is quite similar with ethics. So first, in this case, so first you have to properly classify or differentiate between internal costs and external costs, right? I think that's quite easy. So the cost that easily measurable should be internal costs, and the cost that is really difficult to be measured is the external cost. But on how the company should mitigate their external costs, that will be on your own knowledge. Okay, so your own understanding on the company's operation and also the industry, because the industry related issue is very unique. Okay, so for example, for mining companies, you may have some issue on the environmental impact and also some social impact because of the community around the mining site, something like that. So yeah, it's very specific on the company's industry and also your knowledge on those industry.
So does that mean there are going to be like multiple correct answers for questions?
Yeah. So so basically there's no black and white on mitigating the externalities. So yes, you can like proposing some several activities or programs. So yeah, so
okay, yep, I got it. Okay. Yep, thank you.
Okay, any other comment or question? No? Okay, so the next one is exercise 9. Now we have Tulloch Limited. It's a multinational construction company with subsidiary organization all around the world. Following are 5 of their subsidiaries. Tulloch management is reflecting on the environmental costs expanded by these 5 subsidiaries. So the management want to select the best performing subsidiaries in managing their environmental issues. Okay, so we have some information on prevention, appraisal, internal failure, and external failure costs. Okay, so first we need to select the criteria. So what criteria that we want to use to evaluate the subsidiaries' environmental performance? So you can basically use several criteria, but at first I want to use the ratio of the prevention and appraisal costs with the failure costs. Okay, so for example, for this one, for Braden, the ratio will be 30,000 of prevention costs plus 100,000 of appraisal costs divided by the failure cost, which is 200,000. So 130 divided by 200,000, we get 65% or 0.65. So the idea is that the company should invest sufficiently in their prevention and appraisal costs in order to mitigate any failures. Okay, any environmental failures. So we should expect that the prevention and appraisal cost is sufficient enough to be high enough or sufficient enough to compare to the failure costs. Okay, so this ratio should be ideally more than 1. Okay, so because of the prevention and appraisal cost is sufficient enough to cover any failure. Okay, so the best performing subsidiary should have this ratio greater than 1. So we have two candidates. So first the Braxis, and the next one is the Trausen. So Braxis and Trausen. Okay, is our candidate as the best performing subsidiary. But if you look at closer on Trausen, you can see that the ratio is very high, at 85%. Okay, so that may signal a different problem. Okay, so this may signal that this subsidiary is over investing in their prevention and appraisal costs. Okay, so now you can see that the cost is 1 million plus 2 million, 3 million, while the failure cost is very small, 35,000. Okay, so this might indicate that this subsidiary is over investing in the prevention and appraisal costs, and this may also indicate that the investment is not really addressing the specific environmental problems related to this company's operation or the subsidiary's operation. So it means that the investment is not efficient or not specific enough to address the specific environmental issues within the subsidiary. Okay, so in order to evaluate this issue, the company may also use the total environmental costs as part of their evaluation criteria. Okay, so the company with the smallest environmental cost should be selected as the best performing subsidiary, right? So if you look at this total cost, the smallest environmental cost is the Gen, so this one. Okay, but and the next one is the Thomson. Okay, so by combining these two categories, I think we should select Braxis as the best performing subsidiary. So the best performing, I think it should be Braxis, because Braxis investment is sufficient enough to cover the failure costs, and also the total environmental cost is not as high as the Trausen. Okay, so the idea of this exercise is you have to be very careful in selecting the evaluation criteria and try to use more than one criteria in order to get more comprehensive perspective of these companies or the subsidiaries' environmental performance. Okay, any comment or question on exercise 9? No? Okay, so the next one is problem 13. So now we have Queen Bian City Council has been ordered to pay almost 425,000 in fines and legal costs for polluting the Queen Bian River in 2007. About 1 million liters of untreated sewage was released into the Queen Bian and Molonglo rivers, causing significant contamination downstream. Lake Burley Griffin in Canberra was closed to swimming and water activities because of the health risks. The sewage was released when the old Morissette Street pumping station malfunctioned. Queen Bian Council was convicted in the Land and Environmental Court on Tuesday after legal proceedings by the New South Wales Environmental Protection Agency. The council says ratepayers will not be impacted by the legal costs, and the penalty will be paid from 23 million sewer fund. Okay, so the question is, what considerations should be taken into account by the court when they set the amount of fine that should be paid by the Queen Bayan City Council? Okay, so in my opinion, the court should at least consider 4 elements when they set the amount of fine. First, they should consider the cost of cleaning or treating the lake or mitigating any environmental impacts because of these incidents. Okay, so the costs that need to be incurred for cleaning the lakes and the rivers. Okay, so be important part, or maybe substantial part of the amount of the penalty. Okay, and then the cost to the communities. Okay, because of this pollution, the communities cannot use the rivers. Okay, this may incur some cost for them. So the court should also consider the social costs to the communities because of this pollution. Okay, especially because of the reduced use of the river and the lake. Next is some punitive component, some punishment component. So in order to give some deterrent effects, so the court should consider some punishment element in setting their fines. Okay, so it's to give some strong message to the community and the public that any kind of pollution will be punished. Okay, and the government will be consistently enforce the environmental laws. Okay, so any kind of environmental pollution will be punished with a very high penalty. Okay, so to give a deterrent effect to the public. Okay, so at least the court should consider these 4 elements in their decisions in order to give some appropriate level of fine or penalty to the city council. Okay, so you have any comment or questions on problem 13?
No, all good.
All good, yeah. Okay, so this is the last one. So the discussion question. So the question is, accountant and accounting cannot help address the environmental issues facing by the government and the private sector business leaders. To what extent do you agree or disagree with this statement, and why? Do you agree with this? Do you think accountant can contribute in addressing some environmental problems?
This is where the money goes, so definitely.
So yeah, because accountant deals with money and budget, so obviously accountant can still contribute, right, to this issue. Accountant is not a scientist, so we are not scientists, so obviously we cannot contribute providing any scientific solutions for any environmental issues or problems. So, but first, accountant can contribute by providing some sufficient funding, okay, to any existing scientific projects which try to address the environmental problems or issues. Okay, so giving substantial or sufficient funding or budget is really critical to ensure that the project will continue in providing environmental solutions. So basically, accountant can help the scientists, okay, by providing the sufficient budget for them. Okay, and then accountant can help to manage the scientific projects. Okay, as we have learned that accountant can use the budget or the variance or any other performance management system to help in planning the projects and then organize the project and also control the scientific projects. Okay, so in order to make the project more sustainable and achieving the initial objective. And lastly, accountant can help to measure the external costs. Okay, so actually some accounting standard has already adopted some aspect of the external costs. Okay, so for example, for environmental reporting, now accountant has to calculate the carbon footprint, so the carbon emissions. So that's one of type of the external costs. Okay, so basically accountant can help in measuring the external costs, okay, to help the scientists with sufficient data or information for their research. Okay, so yeah, so basically accountants still can contribute to the process of addressing environmental problem or issues. So if we reflect to this current condition, so if we look at accountant, which is work for pharmaceutical companies doing some research on COVID-19 vaccines. Okay, so obviously accountant cannot help with the scientific research, okay, in finding the vaccine, but accountant with working for the company can help the scientific department or the vaccine department by providing with the department with sufficient budget, help in managing the research project by helping with the financial plan, organizing and controlling activities. Okay, and also the accountant can help in measuring the potential cost and benefit of when the company invent the vaccines. Okay, so basically there's a sufficient areas that the accountant can contribute in addressing any social and environmental problems. Okay, so this is one interesting article by the Harvard Business Review. So accountant will save the world. So if you're interested with this issue, you can read this article. I provide you with this link. So you just simply click this link, you can read this article. Any comment or questions on the discussion question?
No, all good.
Okay, so I think this is the last one. Yeah. So yeah, this is some revision slides. So you can, I think you can read this by yourself. So again, to revise your financial accounting topics, okay, so which we already discussed several times. So shareholders' equity, cash flow statement, the budget, and also some performance management system. Okay, so yeah, this is pretty much all for today. So next, I will inform you with the last online quiz. So if you haven't got the maximum result for your quiz, you still have one more chance to improve your mark. So the last quiz is already open on Monday, or last Monday, and will be closed tomorrow by midnight. Okay, so this quiz will cover two topics, which is the performance management system and accounting for sustainability. As usual, we'll have 12 multiple choice questions. You have 36 minutes to solve the question. You only have one attempt. And then the question will be taken randomly from the test bank, and each student will get different questions. You get proportional distribution of easy, medium, and hard questions. Okay, so if you already have a maximum score for your online quiz, I think, yeah, you can do the quiz only for practice. But if you still have a space for improvement in your online quiz marks, so you can try your best in this quiz. Okay, I will send you this slide and the video later today, so you can review the slide and the video before attempting the quiz. Maybe later tomorrow.
Yep. I have a question. Like, it's related to the online exams. like for example, for the share issues, we need to enter as many journals entries. So is there any format given for us to just enter, or it's just a blank space, and what and how we write it is depending on us?
Yeah, I think there's no specific format for the journal entry. So you have to write it manually. So
Okay.
yeah, I think this process is quite time consuming, right? So
it's just a blank box and we just write it like we want, right?
yeah,
Okay.
just try to use some simple account names. So just like use like, for example, allowance for bad debt. It's just use a simple account like allowance for not allowance for doubtful receivables. Okay, that's too long. Just make it simple. So as long as I get what you mean by this account, so you will get the full mark.
Okay.
So yeah, and then yep.
No, you just continue, and I will say later. Yeah.
And then I think you need more practice on familiarizing yourself with the exam format. Okay, just try to practice more. Use the practice exam that Nelson already created on the UTS Online. Okay, so try to familiarize yourself with the menu and the features of the format, exam format.
Yep. So like additional on the journal entries part, like when I'm doing the writing essays, it's actually require me to like for the amount, money amount for credit and debit, it needs to be separated columns. I mean, it cannot be on the straight columns. So how about for online? Because it takes time to divide columns, like.
Yeah.
So if I just violate that format, do I get like this mark reduce or something, reductions or something?
Yeah, I think there's no specific format on the online exam. So for the journal entries, as long as you're clearly show what you mean by the journal. Okay, so in accounting, it's common that we put the credit is more with some distance from the debit.
Yep.
Okay, so don't if you mix that kind of convention, so you may get confused of what you mean by this journal. So just follow the general convention in accounting and make it as simple as possible, so in order to save time.
Yep.
Okay, so yeah, so unfortunately you have to manage the exam without any help in the exam format.
All right. Yep. Maybe I got it. Yeah.
Okay.
That's all. Yeah.
Okay. Any other comment or question?
Thank you for the semester. Thank you for helping us from all this.
Okay, so you're most welcome. So lastly, I have one more announcement. So there's a group of researchers at the UTS Business School that want to use your data in the subject. So I think you already know this from your accounting A course. So they will continue use your data, which is your mark, your online quiz, your age, your gender, the year of study, weighted average marks, okay, and language spoken, and many other information. So each student which enroll in this subject is automatically part of this study. But if you don't want to be part of this study and you don't want the researchers use your data, you can email use your UTS account. So you can email Rachel, James Wakefield, or Peter Wells and saying that I don't want to be part of this study. Okay, so they will exclude you from the sample. Oh.
All right.
Okay. Yeah. So, but if you're happy with this study, just do nothing, and then they will report. They will not report any individual information, and then I think they will only report the aggregated data for their papers. Okay, that will be the last one. Any other comment before we finish? No? Okay, so yeah, that's pretty much the tutorial. So hopefully you enjoyed the tutorial from the beginning up to today. So whenever you have problems, you can always contact me so we can organize a
Oh yeah, one
meeting.
last question. So,
Oh, okay.
sorry, for the homework marks, it will be uploaded soon, I guess?
Yeah, I think Netherlands still waiting for other tutors to upload their marks.
Okay.
Okay, and I think we are thinking also to give some additional marks, some like a bonus mark for the homework.
Okay. Yeah.
Okay. Okay. Any other comment
Thank
or
you.
questions? No. Okay. So I think we can end this tutorial. So good luck with your final exams. And whenever you have problem, you can always contact me.
Thanks a lot.
Thank you.
All right. Thank
Okay.
you.
Thank you.
Bye.
Have a nice one.
Bye.
Take care.
Thanks for the semester.
Thank you.